Hey, I hope you're having a great Saturday. This is Karen, and following on these golden nuggets, today I'm going to actually dig in a little bit about really what is the difference between crowdfunding investing and angel investing as angel investor groups, right? Because they're very different. Now, angel investors, so accredited high net worth millionaires, remember the how you qualify is 200,000 individual income with a reasonable expectation of being able to continue that in the next 2 years, 300,000 in combined income, and $1 million in assets, not counting your primary residence. So that could be your 401k, that could be other investments, your stock market, other rental properties that you've invested in to get to the accredited status. But keep in mind, it's really all about liquidity, right? Because there's a lot of people with a lot of assets that don't have a lot of cash. So, and when I wrote the book, Inside Secrets to Angel Investing, right, you can see it behind me in the shadows there, but it was targeted towards that person in corporate America. There's about 7 million of you out there that had a big fat 401k. So they would easily qualify under a W-2 income of over $250,000, just to keep it nice and simple. And they would had about $1 million, big old fat, been working corporate America for a while, 401k, so that they could take part of it, carve it out, and put it to work in crowdfunding companies. Okay. And the reason for this strategy is because those busy executives, as I found when I ran my own angel investor group, folks that had day jobs, people that were C-level suite, mid-tier managers making that kind of money, or people that ran their own businesses, oftentimes didn't have the time that it took to be a part of an angel network that it required, because there's most of the angel networks, most of them work with under a volunteer model, that volunteers within members of the organization do the screening, do the due diligence, do all the different things that make them able to make those investments. Really big ones will have a team that are paid, everybody pays in and pays those people's salary, but somebody's, you got to get paid, right? So that's why it's volunteers, because angels want their money going to the companies that they're investing in, not going to some overhead. So so that's kind of, the sort of the nature of what I was trying to create when I launched this book. And I come to find out, and the idea was crowdfunding, particularly Reg CF, because of the kind of portal that it goes through, has less risk. There's been an organization, a portal that's licensed by FINRA to do the review of those companies to make it so that they are, in theory, it's at least as good as what an angel investor group would do. Their ability to determine whether this company is really going to be viable, or are they doing the background checks to make sure that the founders aren't fraudulent in some way or have a history of financial crimes or anything like that, right? So that's kind of the basis of where he came from, and why I wanting people knowing and having a real passion myself for entrepreneurs to be able to get access to capital. The Jobs Act opened up that door, took that barrier away, and I thought it was a great strategy for those folks like who had been in my angel group to now have the ability, without having the time commitment, but they had the ability to put their money to work in private equity, private stock of entrepreneurs, along with their real estate and stock portfolio. So that's kind of where we're going here, right? And so now I'm launching this full-on 24/7 DIY, as well as hand-holding training, live broadcast through the Compassionate Capitalist Wealth Maximizing System. It's launching within the next near future. I don't know, I have an exact date. Goal is within a week, but we'll see. It's going to be ready. But before it's super duper ready, you have an opportunity to get in and buy your access to that for free under the pre-sale, right? At dothedeal.org. Okay, so let's talk about angel investor networks and inform you more about that. And I'm going to share my screen and we'll take a look at this stuff. Okay, so this first one, this comes from the Angel Funders Report, which is also part of the Angel Capital Association. All right, and so this shows in 2021. I'll zoom in a little bit so you can see it. Angel groups, these are not all angel groups and angel networks are members of the Angel Capital Association. Some of them are informal groups, but this is what they track. I use statistics sometimes from the University of New Hampshire Venture Capital Research and their numbers, and they just really anybody that wants to sign up. ACA is a fee-based alliance, right? Really good place to go find angel groups. You want to be a part of an angel group, and there's serious pluses to be a part of an angel group, but you must be an accredited investor to be a part of it. Those are the stats I said at the beginning. And remember, it comes down to liquidity, because part of the reason why I shifted the focus of my education to everybody, not just those corporate America executives and, accredited investors, was that when I would get up and talk about this, I always had millennials raise your hand and say, how do I learn how to crowdfund invest? So that's what the training is all about. Okay, so, right, so you can see this, that it says here that this leverage, that means that their investment got leveraged by follow-on investment so that it made their initial investment 5 times worth more, got 5 times the value of additional leverage. And this number here is what their multiple of their investment capital increased. So they put 100,000 in, it grew in value to 270,000. All right, as part of that. And they typically would invest about, each angel group puts about 5.3 million per year in. That's the combined nature of all of those investors pooling their money and putting them in. And you'll see a little bit more about that in just a second. But note here, this is what's important. Their top, the sectors that they put money into. See, the reality is that that's the big difference between one of the big differences between angel groups and companies that invest, people that invest in crowdfunding and the crowdfunding companies. Because of the history, and I've talked about the history, these sectors end up becoming the ones that created the wealth when companies were, starting in the 80s with technology and things like that and the big exits. And those investors that exited became the members of these angel groups. So they invest in what they know. And because of that, you had the other sectors, consumer products, sports, recreation, food products, franchising, all of those things don't get included in this, because they're other sectors, they're typically more capital intensive, and they wanted to invest in the high stakes things of what they know. This is a really good statistic right here. Women entrepreneurs raised $1 for all raised by men. That's huge change, because I just shared in a post yesterday, only 2.7% of the venture capital money went to women. So it'll be interesting to see what happens in the next couple of years when these women-owned, these founders are now in the market for venture capital. Okay, so let's move on here. I wanted to show you this. This is it right here. Oh. Okay, I'm trying to, what's happening? I made a mistake. There we go. This is what I want. Okay, so they mostly invest in seed rounds, right? And a seed round, and this is, seed rounds are, you got seed, Series A's, and Series B. So very similar to angel investment. I mean, the crowdfunding, you're investing at the startup seed stage. Seed stage is the first stage. And then the follow-on, where typical VCs and other money comes in, and boutique angel groups and angel funds will come into the Series A's and Series B. So it looks here like they started participating a little bit later in the stage. It requires more money and the value of the company is less. I want to draw your attention here because this is a real reason why crowdfunding and the different types of crowdfunding has become something. It's a necessity for companies that are building something innovative to get to a point that they could get angel network money, right? Because a lot of angel groups, most of the ones that when I take entrepreneurs that I'm working with to angel groups, they require them to have revenue. And that means they have to have a product to sell. And the big challenge is, where do companies, particularly companies that are minority owned, BIPOC companies and women owned, where do they get the capital to develop their product, to get their product done, to get to market? Where did they go get that? And that's one of the big values of crowdfunding in this space. All right, so let's go over here. So angel investor statistics, angel investing activity totals about 24 billion into 64,000 startups. This was as of last year, I believe. Angel investing with 12 investments over a period of 5 years have a 75% chance of the 2.6 return. That's the 3 times as profitable number that I drop out of there at times. It varies. Sometimes it's 2.7, 2.8, 3.1. It fluctuates. I've not seen it below 2.5. Okay. And look at this. 20% of all angel investors are women. Now, these are angel investors in groups. So interesting. That's gone up. It was at about 5%. That could be the reason why because angels are in the room helping with the decision of what to invest in, more women are able to raise capital. That could be part of that. Investments in Black-led companies grew to 15% in 2020, a 5-fold increase. That is amazing because the stats we showed, and I guess it was 2019, was like at 3%, which is really, it's because it's tragic right now that we've got this nonprofit going after the venture capital firms that have raised money specifically to help BIPOC. That's for all the different people of color, right? It's Black, Indigenous, people of color, I think is what it stands for. Anyway, that's why it's gone up, and the emphasis and lawsuits threatening them with putting money into Black companies and not making that money available to male white companies as some kind of discrimination, when up until that point, up until 2020, it was like 3%. I think it's dropped back down. Less than 3%. It was actually 1.5% of the Black-owned companies got angel capital and venture capital money. But this shows that in angel side, angels are actively investing more, right? More than half of all angel investors, in both new and experience, have experienced some experience as entrepreneurs. Yep, that's a true statement. And here we go. 64,000 startups, but there's like 500,000 startups. So there's a lot more companies out there, and that's where the crowdfunding part, starts to become a really important part of the growth of innovation in our country, the growth in jobs, because that's where jobs are created, or with startups. And that is in seed stage. And that is, the real reason why it's so critical that you're listening right now and that you're looking at becoming an investor in entrepreneurs. So let's look at this one. So this is what is the return of equity on crowdfunding, right? A more conservative estimate may postulate that the best return equity crowdfunding will see in the lowest from the angel studies at 17.4%. However, the exact details of Reg CF still need to be observed. They're not wide, because they vary widely, and they don't necessarily know all of it because some of it still remains private, right? That not everything is filed with the SEC on what it is, and nobody's really reporting a lot of these numbers, but 17.5% is huge. That means that at that stage, they're averaging a much larger return than the traditional angels. So that's it. And a big part of this is a whole thing of the diversification of your portfolio. I talked about in the last live feed yesterday, the Angel Profitability Blueprint, which you'll learn when you come into the Angel My Training program. All right, so this right here is really the cat's meow, right? This is Angel VC Public Market Reg D Historical and Estimated. Okay, look at this. So angel investment, 30%, venture capital, a little under, S&P down. Yeah, it usually comes in around 8% in a year. This guy wrote this thing. That's what his estimate is, right? This is the delta between the stock market there. Equity crowdfunding in UK. This is Reg CF. And that's really, it's unknown about this, but this is the Reg CF. If they don't have a strategy to go raise additional capital, which is one of the risk mitigation factors that you have to look at it. And so that's why it's a lower return. It's really kind of a base return. And sometimes they specifically put it out there. They do a loan, they do peer-to-peer lending. And these are the ones that we'll look at to do something like this that becomes a predictable return that overall in a balanced portfolio will grow it. Reg D is going to be your 506C offerings. And then this is where they get to like a WeFunder versus a seed invest, because this will include interstate exemptions, which is under Reg D 504, as well as Reg A plus. And you see the potential here is up at 40%. So that's really part of a balanced portfolio. So the idea behind these, and I guess what they're saying is that, you know, you really have the potential to make, if you go about this in a wise way, you get the emotional benefits of reward-based crowdfunding or any kind of crowdfunding. You know, part of the reason why people are angels is they're investing in things that they know and love and they have a passion about. But this is also going to, you know, show how you can build this portfolio that has a mixed set of returns for an overall positive return on investment versus what you traditionally would get out of the stock market, because the stock market yield is not as high. It doesn't have potential for growth as high. And real estate, as I showed a couple of days ago, there's all this other cost associated with that brings your internal rate of return on the property while you own it is much lower than what you get out of Reg CF or even angel investing. The big return when you sell it many years later can make up for that depending on how the market works, but you don't get all of that money, right? Because you have equity, you have a loan on that property as well. So you get the equity of what that increase in value has gone, less all of your expenses over the years against that. And the interest you paid and taxes you paid and all that other kind of stuff, right? So with that, please think about this. This is your opportunity. Get into, do the deal. The intro level of the Compassionate Capitalist Wealth Maximizing System. Go in there. If you want to get a free teaser of what the kinds of stuff I talk about in my book and otherwise, I have the 12 Secrets of Innovation and Wealth. You go to karenrands.co, you'll get that. You might get it when you sign up for this. I have to go look and see what it sends you as the bonuses. But please go ahead and sign up and get in for free while you can while we're waiting to launch this. And with that, I'll say onwards and upwards. See you tomorrow.